It's Friday the 2nd of August. I'm looking at the dollar index chart, which as you can see has been mostly trading sideways for many months. In fact, well, this is just the chart for this year, but if I go back further, it's been trading sideways for a lot longer. More recently, through July, we had a really good run up and it really looked like the dollar index was breaking higher. With the less than dovish Fed minutes on Wednesday, certainly looked like we were going to get a breakout for the dollar at last and finally see some sort of direction that we could run a swing trade from over the next few weeks and maybe even months. However, what I didn't expect was Trump to then slap some taxes on the Chinese, some additional taxes, and that whacked the dollar yesterday. We reversed very sharply, and this has actually left what you can see is quite a negative candle now. A spike higher, big red body after making a new high. So this really doesn't look good for the dollar now, and I wonder if we can retreat back to, well, maybe we'll test these peaks here at 97.76, 97 sort of 58, and maybe even get down to 97.30. Interesting to note how the dollar index has a trend line going back to October 2017, so that's almost 2 years old. At 99.16 that trend line comes in. We got to 98.93, so you could say that we've rejected that trend line, and maybe we'll head a little bit lower, as I suggested by looking at it from the daily chart. The dollar yen has been quite kind to us in recent days. We were selling up around the 108.85, 108.95 area, and for 3 days in a row that trade actually worked quite well. Gave us some decent turns of roughly 50 pips on each trade. Now yesterday when we broke above 109.00, I saw that as a buy signal, but we only got to 109.30 and then obviously absolutely collapsed on that on the Trump tariffs. So that was unexpected, but once we got back down below 108.80, that was clearly negative. I was actually suggesting a buy down at 108.10 because that had been good support, but obviously we've crashed through that now. So this is looking like we've got a little bit of support, 107.20. Then we've got to watch that 106.77 low from this year. If that breaks, and there's a good chance that it will, then we're going to head significantly lower, and we could easily test 105.00, the low for the year on that crazy spike on the second trading day of the year. Yen powering higher as a safe haven yesterday, as did gold in such times of uncertainty. So we're down to 118.84. The low this year is 118.72. So we're very close to testing that low. So we'll see what happens there. If it holds, then we've got a huge double bottom. If it doesn't hold, we've got a pretty decent sell signal on the break below there. This is the weekly chart. You can just see that a break below here would be quite negative. We've then got a little gap to fill actually, down, which is at 117.78. That would be the next target. Euro has been heading lower against the US dollar ever since the beginning of last year, and we've broken lower again this week. We broke the previous lows at around 111.00. That was my sell signal. We reached 110.25. So as long as we hold below 111.00, this market is likely to continue heading lower. The euro didn't benefit from that US dollar weakness, so I think it really does show you how weak the euro is at the moment. Cable, the pound versus the dollar. I believe the pound is the weakest currency in the world at the moment. Now, we've found some support around 120.76, which is this 78.6% fib on the weekly chart. You can see there is a little bit of support from previous lows, 121.06, 119.79, 120.81, 120.86. So we've been down to 120.77. So we seem to be getting a little bit of support from this area and from this fib, although I'm not seeing any buy signal. We're just starting to get oversold on the weekly chart. On the daily chart, of course, we're a little bit more oversold because we've been so weak after this significant breakdown during this week. I think the best the bulls can hope for is some stability and some sideways movement, maybe a small recovery, but there is no buy signal here. So I would be very careful about getting long. Gold, well, the thing I did right was spot that gold would head sideways around this time, let me just widen this chart out. Beginning of last week, I suggested gold would trade sideways, and that really did work for almost 2 weeks, up until Thursday of this week. So, up until Wednesday of this week. That's Thursday. So Wednesday, we dipped to 114.11. This was a really good support level. Because I suggested that the market was going to trade sideways, we were buying down around sort of 114.10. That worked really, really well, as you can see. Now on yesterday morning, we dipped down as far as 114.00. Now I assumed as we had broken down below 114.10, 114.08 actually, we were going to head down to sort of 113, the low 113.90 area at least, maybe even down to 113.85. 13.85.83 for a buying opportunity, but that was not the case. The Trump tariff announcement saw gold absolutely rocket, safe haven, just like the yen, and we've pushed back up to this trend line here. So we have to see what happens at the trend line at 14.46. Clearly, bulls will need to try to break above 14.52. If we end the week above 14.52, that would be very positive for next week. I'm going to show you the crude oil chart, WTI crude. It's messy, this one. I'm really quite confused with oil, I have to say. This is just very scrappy and erratic, this whole price action through July. Yesterday we plunged for obvious reasons that I've already talked about. The break below this trend line at 56.40 forced the price significantly lower. Where do we go from here? I don't really know, if I'm honest. It's just a confusing chart. If we get back up to the low $56 area, then we've obviously got quite a lot of resistance going on here. We'd have to get back above 57.00 for me to feel more positive about oil. E-mini S&P has been a little bit easier, actually, if anything, lately. Now, I've been banging on about this trend line that goes back to the beginning of 2018. So very, very significant trend line. And this was where I was suggested, well, it was key resistance for sure. Now, we absolutely nailed it right on 30.30, you can see, and we reversed from there. So this trend line really did do its job. If you sold it up there, having read my reports, well done. That certainly worked. Now, I can't say that I expected the market to collapse so dramatically this week, to be fair. You can see that we had good support of 29.58 from the 23.6% fib, coupled with this previous high from April, or the 1st of May actually, at 29.61. And that level really did work well when we retested it, and it worked beautifully as support on the way down. So the fact that we broke that yesterday is quite significant. Obviously we bounced off there initially on Wednesday, rocketed up on Thursday when everything looked okay, and then we've collapsed below 29.58. So holding below 29, sort of, let's call it 29.60, 29.56 is negative and could push the S&P down to 29.30. We may even get as far as good support around the 29.15, 29.12 area. You can see from from the price action that looks like a fairly decent support level. Nowhere near as strong as that 29.58 level, but maybe good enough to engineer a little bounce, because the bulls do like to step in when they see a sell-off in the US stock markets. We've got the 100-day moving average at 29.03, so we would have to hold above 2900. If you're buying it around the 2019 area, the teens, the mid-teens, then you need to have a stop just below 2900. Break below 2900 would be a sell signal. Nasdaq, similar pattern of price action yesterday. Of course, strong recovery, and then we dumped. I would suggest that we could head down as far as 77.25, 77.15. We've got a little gap to fill there, 77.26, which is just below the low for July at 77.43. So watch for a break below 77.43, which is very minor support, to test 77.26, 77.13, some fib support there. By the time we get there, this 55-day moving average will be a little bit higher, but I would suggest a break below 77.00 could take us down to, you know what, we could get down to 76.20, which is the 100-day moving average. Now that is quite an interesting chart. This does look a mess, and normally I'd say that I can't really decipher what's going on here, because we just haven't really gone anywhere in 3 months or 4 months. But what I'm finding interesting is the green line here is the 500-day moving average, and the 55-day moving average comes in as well around this area. So, and we've got 38.2% fib. So anywhere from 12,235 up to 12,250 was a good level. That held initially on the downside. Now this is working really nicely as resistance. Yesterday we bounced as far as 12,260. That was my sell level, and then I don't know what's going on with this chart because it looks like it's not showing yesterday's dump. This is probably because we closed, official close was just before the announcement from Trump, and then in after hours trading we would have collapsed. So that's why this chart looks rather odd with a big blue candle, which shouldn't be the big blue candle. It should be a spike higher with a small red body. Anyway, enough of that. The fact that we've rejected that resistance is interesting, and now we're trading below the 100-day moving average, which had offered support, and we're trading below the 23.6% fib at 12,088. So this looks pretty negative. As you can see, as I'm speaking to you now, we're heading towards 12,000. The low this week is 12,022. Watch for a break below 12,000, which is around the 61.8% fib. That will be significantly more negative for the DAX futures. Because I post daily videos of my technical analysis and trade ideas, I'm asked every week which platform I use. So I use Metastock. I've used this for as many years as I can remember. I've tried so many different platforms, but this is by far the best. The main reason is because the quality of the data is just excellent. That's obviously the most important thing for a technical analyst. You've got to have quality data. The other thing is I can have as many windows open as I want, so that I can look at multiple time frames all at the same time. This is absolutely critical for me. It allows me to see all the different levels in all the different time frames, so I can see which line up and which would be the best levels to trade. So I've squashed this onto one screen. I usually have this spread out over 2 or 3 screens, but I can't record them all at the same time. So this is why I've shown you this. Now I'm going to just widen it out so you can sort of see what my main screen looks like. So I'll have 3 time frames on my main screen. So I've got the weekly, which I can quickly switch to the monthly, which I'll do maybe once a week, once every 2 weeks, just to keep an eye on whatever levels might be important to me there. And then I've got the daily chart and the hourly chart, and on my other screen I've got the 4-hour chart. So I can very quickly look at all the different time frames, and I can compare them, and then I can blow up. I can sort of expand one screen if I want to. So for example, if I'm trading very short term throughout the day and I want to have a look at the 4-hour chart, then I can quickly do that. Now, one of the other most important things that I can show you is on other platforms I've used, you put in a trend line and then you change the time period, and the trend line jumps all over the place and it's not relevant. You have to keep redrawing your trend lines. This is just frustrating and a waste of time. With Metastock, that doesn't happen. You can quickly switch time frames, as I've just done. I'm now on the 30-minute, and as you can see, the trend line is absolutely bang on accurate still. So this is another big plus. If I go to 10 minutes, once this loads, you'll see that the trend line again is absolutely bang on the data. So it's just simple to use, very straightforward. The data is very accurate. The trend lines and all the tools are very accurate. I know that when I pick a level, I can absolutely. I do believe that. Well, my subscribers tell me that it's amazing how I manage to pick pinpoint levels, and really, it's all down to this system that allows me to do that. So it's worth paying a little bit of money out to get the right data. You're going to make that back within one trade. Do yourself a favor, go to the metastock.com page, which gives you all the information you need. This system can scan markets with your criteria to find trades for you. You can backtest with it. It's really quite incredible. Go to the Metastock homepage, click on what is Metastock, and it'll take you to this page, and you can watch the video about it. All the information is there. When you're ready for a 1-week free trial, just go to metastock.com/daytrade ideas. You won't regret it.